Hello friends, how are you? Are you investing money? I invest money in my GICs. I invest a lot of money in GICs. Like GICs are feels like very safe investments. Presently I am getting about 4 to 5% interest rates on the GICs. They are locked in for about 5 years. Those GICs, they are locked in for 5 years. I'm getting 4 to 5% interest rate. They feel safe. I don't have to worry about stock market fluctuations. Stock markets can go down. You need to have some emergency fund, like 3 to 6 months emergency fund. And if you have that money in the GIC, you can access that money anytime, and that makes you feel safe. You have to pay your bills in any case. If you can have a emergency fund for like 1 to 2 years in GICs, that is a very good thing. You can invest the rest of your money in the broad market index ETFs. That will provide you some growth for the long term. Because in the last 100 years, the stock market has only fallen 30% or more, about 3 or 4 times in the last 100 years. So there is very less chance the stock market will fall more than 30% in the next 10 to 20 years. So if you have some money set aside in GICs for 3 years, 4 years, and the rest of the money you invest for the long term, I think that's a very good investment strategy. It will allow your money to grow. You don't want to be too conservative also, because if you are too conservative, you won't get a lot of return. You need also long-term growth, because inflation eating the purchasing power of the money. Inflation rate presently is about 5% in my city, my country, and most other places. Even though the government says the inflation is 2% and 3%, but the real life inflation is not 2 or 3%, it is maybe 5% or 6%. In some items, it could be even 20-25%. So you don't believe that inflation, the government says the inflation is 2% and 3%. You don't believe that. The inflation is higher. So you have to make return for that inflation. And only way you can make in return for the higher inflation, to beat that inflation, is in the index fund like S&P 500 index fund. And that can provide you a return of about 10% per year. And this is diversified. That means it is less risky. It is less risky, less volatile versus individual stocks. But I also invest some money in GICs to meet my short-term needs. Up to 3 years of your needs should be in GICs. Like in 2022, the interest rates were about 5%. The Bank of Canada and Bank of other Reserve Bank around the world, they increased the interest rates to combat inflation. I took advantage of that and I put my money in long-term, like 5-year fixed rate closed GICs to get the advantage of the higher interest rates. And since then I am still getting my GICs will be maturing in 2028 to 2029. Even though the rates have fallen since then, but I am still enjoying higher rates because I logged in at the higher rates. Also alongside I have investment in US index fund, Canada index fund, emerging market index funds. The emerging markets have done quite well recently. And also the European market I have invested, all these markets I have invested. In the meantime, you can take advantage of the sector ETFs also. There are a lot of sector ETFs, like for example the ETFs for the gold market, the precious metal ETF is there, commodity ETFs are there, oil ETF is there for the energy and oil ETF, and semiconductor and chips ETF are there, and a lot of other ETFs, bank ETFs are there. You can invest in bank ETFs. All these ETFs have about 25-30 different stocks and they are diversified. You don't have the risk of one individual stock. They are diversified and you have less volatility and less risk. And in case of the bank ETF, energy and oil ETF, you are also getting 4% dividend. I am getting dividend also. So that is good for the dividend as well as growth. And if you want pure growth, you can go for semiconductor ETF. Or if you want even broader, you can go for global technology ETF. That one has all the semiconductor and chips stocks as well as other stocks. Other hyperscalers like Apple, Google, Amazon, Palantir and all other technology stocks are in there. That will provide growth for the long term. The last 10-year return for the global technology fund is about 25%. It is more than the S&P 500. If you can stomach the short-term volatility, that is a good option. You can put about 20% of your portfolio in global technology fund and divide the rest across other ETFs like sector ETFs like banks and commodities and gold, precious metals, industrials ETFs, consumer discretionary or consumer staples ETF. You can divide across number of ETFs. If you want total market exposure, then the ETF is XEQT. That provides a total market exposure for the entire market. Very less volatility is there, and you can enjoy long-term gains. That's what I am doing. I also invest in individual stocks like blue chip stocks, Home Depot stock I have invested, McDonald's, Pepsi, Coke, Netflix, Costco. Lot of individual stocks also I have invested, but I keep it small and I buy a basket of lot of stocks so that I am well diversified. And I keep buying regularly at different times so that I am getting different prices at the different times of the year, and that way I am dollar cost averaging of my investment. So these ways I can make good return and reduce the volatility of my portfolio. The beta of the portfolio I can reduce. Standard deviation is also about only 10%, less than 10% of my portfolio. So I will share more of my investment ideas with you in the next article. But in the meantime, I wish you good luck for your investment journey, and I will see you next time.